Welcome back. Let's do our call of the day. It is about that stock right there, which is down yet again today. JPMorgan downgrading Target to neutral. They say the retailer faces too many rising concerns. So I want to find out what a shareholder is doing here. We believe this is from the note. We believe this share loss could accelerate into back to school and linger into holiday given consumer pressures and recent company controversies. There's been controversy around this company, a backlash about their Pride merchandise. I mean, the culture wars are kind of coming to a retailer or a consumer brand near you, right? It's Anheuser-Busch first, and now we're talking about this. I was reading something about Chick-fil-A. So here we are. I mean, what do you do as a shareholder?
Well, you stay calm, for sure. I'm frustrated by all means. And the macro challenges are theirs, right? And it's nothing new. It's a mix issue, Scott, number one, right? Because they do more discretionary revenues, 55%, versus grocery, which is 45% of their total revenues. And so no one's really buying the discretionary stuff. And you have disinflation on the grocery stuff. So you have some challenges here in the near term. That being said, I still think they offer a value proposition. They've had 12 consecutive quarters of traffic growth, so that tells you they're continuing to take market share. Gross margins were a complete standout this past quarter, helped by freight, but also helped by cost cutting. And they got religion, right? And inventories, which is a big problem for them and everybody else, fell 16% in this past quarter. So to me, I think they're doing everything they can. I'm not happy with the political side of things, but they're doing things on the fundamental side that I like. And at 15 times forward estimates, I think it's very attractive. Down 13% this year. I'll take a page out of Josh's book, an RSI of 20, and that's probably oversold. I'm not a technician, but that's oversold in my book. And so to me, I'm going to stay patient, probably look for opportunities to add on the pullbacks.
Well, what do you do, though, when you can tick off all of these legitimate fundamental reasons as to why the business is doing better than a 10 in a row day decline would suggest because of, in large part, this controversy?
I'm just going to have to stay calm and look for the valuation and see. I'm going to look at where I think numbers can go based on what I just outlined for you. And I think that I could be short-sighted and sell this, but I just don't think that's the right thing to do.
Well, you trimmed it not that long ago.
Yeah, and
in April.
I had gains in it, so I took profits at the time, but I bought it back, because the stock has fallen quite substantially. So I'm not going to get into the fray right now, but I do like it for the long term.
I'm wondering if we're at an inflection point, Jim, with the consumer in general. Dollar General, they cut their outlook, okay? That's not exactly, the highest of high-end retail. Macy's, they slashed their guidance. Capri Holdings, that is among the highest of high-end retail. Michael Kors, Versace, et cetera. They're talking about slowing sales. What are we to think right now in terms of the consumer, whether this is, in fact, an inflection point?
My opinion, Scott, is that the consumer is still healthy, and that what you're citing is still this: consumers are overbought. They bought everything. They don't need another ring light. They don't need another pair of yoga pants. What they are still consuming is travel and experiences, and you see that in American Airlines. I think it was yesterday raised its guidance for this quarter.
You saw it in the ADP numbers. Services led the beat in ADP.
But let's dance with the bears' suggestion. All right, the bears would say that this is all this pent-up stimulus money that's going to run out in the next 6 months. And by the way, if we continue on this trajectory, it will run out. So what has to happen, and this is my thesis for the overall market, is that inflation continues to come down. The consumer starts to feel a little better. Jobs continue to hang in there. And guess what? Consumption stays or grows at historical rate. Where that thesis breaks down is the Fed continues to raise rate. Inflation continues to go higher. The consumer really hunkers down. And then job losses pile on. That's a scenario that could happen.
Inflation doesn't have to go higher. It can just stay where it is, too. This sticky nature of it, which means that the Fed isn't necessarily going to just walk away. They may do their little June pause, but nobody is really suggestive within the Fed, who's been speaking lately, that that's it. We're done forever.
True. I mean, frankly, I hope they do pause and not, call it a skip. I think that's what they're calling it, right?
Whatever you want to call it.
Let's see the data come in. Let's see the data come in. Next month's CPI, or 2 weeks from now, we get the May CPI. It's scheduled for 4.1% on the headline. And I know everybody wants to talk about core and ex-housing and all this sort of stuff, but if you start to get the headline CPI down with a 3 handle, I mean, the Fed's going to be hard-pressed to just take it easy and not keep talking about core services X housing. People aren't going to understand.
You're looking at Nike right now, right? Near the top of your list in terms of stocks you're looking to buy.
Yeah.
What confidence have you been given by what's happened around that stock in that space?
Yeah.
Right?
Well,
Foot Locker got destroyed.
Yeah.
Oh, that's Foot Locker problems, though. That's not Nike problems. That's a mix issue.
I don't want you to think
that's Nike going more direct to consumer. They're now at 29% direct to consumer. They were 9% pre-COVID. That directly hurts Foot Locker.
Nike was down pretty substantially in the wake of that.
I mean, Nike is now at 26 times next year's earnings, and historically that's been the top of the range at which, when I buy it, it does extraordinarily well. Now, to your question, I hear it coming out of your mouth, well, why aren't you buying it today? There's a very simple answer.
I'm not.
But there's a very simple answer, because I don't want to sound like I'm talking out of both sides of my mouth. I am so heavily exposed to the cycle picking up, whether it's General Motors or Alaska Airlines or Wynn Resorts. I mean, I am so heavily exposed already that I would like to see a little bit more evidence of a turn, regional bank index, financials in general. I'd like to see more people coming to my side of the equation as far as where the economy and market's going before I get even heavier.
What about Lulu, which is today, Steph?
I mean, the problem I've had with Lulu is it's always been expensive. Now I know it's growing even faster than Nike, and I think it'll be okay. I just don't like the valuation. That being said, the risk reward, the stock hasn't really done very well this year, so it's okay. But I'd rather buy more Nike. If Lulu isn't that great and Nike falls more, I'd much rather buy that one, because I like this whole, as I just mentioned, the DTC transition helps their margins dramatically,
right? And
so that
isn't Nike more expensive though than Lulu?
No.
What's the valuation of forward on Nike?
Nike is 26 times.
Well, this is 28. I mean, Well,
but historically it's been much more expensive, and I think their earnings have been coming down. Lulu's earnings have been coming down.
They're virtually the same forward PE.
The growth rate has been coming down much more rapidly for Lulu than it has been for Nike. I mean, Nike's been kind of steady, right? Look, you can pick your poison, pick what you want, but I think that Nike is the better longer-term story. And oh, by the way, I'm not giving up on China and the China recovery from the consumer, not manufacturing, but consumer.
Well, that's why you're holding on to stocks like Estee Lauder, I guess.
Yeah.
Well, where's it been, though? I mean, where is that consumer that?
Well, it just started. They just reopened a month and a half ago. They were wearing masks 2 months ago. So I think you have to give it some time. The services component in the PMIs have actually been better than expected, way into expansionary mode.
Josh, quick. Yep, go ahead. Sorry, Steph.
Steph, doesn't Nike have a fashion problem? It's kind of out. The resale markets are drying up. That's a canary in the coal mine. The brand is not hot. They've been overly reliant on Jordans. They have an inventory glut. They're discounting sneakers that they can't get rid of. That's not turning around this summer.
Nike's total revenues grew 19% last quarter. Every geography grew double digits. Digital and DTC grew in the 20s. So no, they don't have a growth problem, and I don't think that they have a product problem either. They have a 78% market share in sneakers. So I think that they have a great pipeline, great technology.
Stock down 19% in a month.
And that's because a lot of the China concerns too, right? I mean, I think that's not.
I don't know.
I don't think China is dead, but we have to wait. We have to get the results from them.